Hello, investors, and welcome to the weekly market report. I'm AJMonte, Chief Technical Analyst with Sticky Trades. And yes, we had another crazy week, downgrade in our credit rating. Then we had an initial rally today as I'm recording this on Friday, and then the hard sell-off right around noon. And we closed on the lows today. Now, before I get to the charts, please make sure you follow right to the end. And we have a special little treat for you because our mascot has a video surprise for you where Sticky, or I should say Mrs. Sticky, is enjoying her life and upholding our motto to enjoy life and not get so stuck to the computer. Forgive me for all the puns, but I couldn't help it. Our mascot is Sticky, the Australian Shepherd, and Sticky is going around the world having all these different adventures. So thank you for liking and sharing and commenting on our YouTube channel. That's helping us grow that channel quite dramatically, by the way. So let's take a look at what happened today with DIA. We had a big, fat, red candle show up today in the form of, right there, that is a bearish engulfing candle. When you have that big red body engulfing, or you could even say eclipsing the previous green body, that is very bearish. And if we look back here, you see another bearish engulfing. Bearish engulfing candles and bearish haramis are extremely bearish. And you can see back here, we had a bearish harami. Here was another bearish harami. Back here was a bearish harami. And you can see that after these bearish haramis and engulfing candles show up, we usually get pretty dramatic sell-offs. And so we have that right now, but it's not just the bearish engulfing candle that's got my attention here. It's the fact that we closed just a hair over that 20-period moving average, and the momentum line down here was crossed on the CCI. For those of you who follow me, you know that I pay very close attention to the CCI and usually get 2 to 4 more down days after that cross. Initially, I was thinking for possible short covering. You may have picked up on that commentary on Wednesday during the midweek report, but that bearish engulfing candle has thrown a wrench into the whole bull position. And so I'm still holding this downside target of 341.84. And if you look very interestingly here at the weekly chart, we have a bearish engulfing on the weekly. We have bearish engulfings on the weekly on IWM, which I'm going to get to next. So there's a bearish engulfing. And this is the first time in a very long time where we have bearish engulfing candles showing up, or at least bearish harami showing up on all 3 time frames: the daily, the weekly, and the monthly. Look at the monthly chart on IWM. You see what I'm talking about here as I zoom in. That is a bearish harami, and we still have a lot of month left in August, as I believe that the sellers are going to try to beat the rush into the most notorious months, September and October, which generally are down months. Not all the time, but the large majority of the time, those months we see down markets. So I think we're going to see a race to beat that rush as we move forward. Now let me go back to the daily on IWM. Here's another one, very slight, but it is a bearish engulfing on slightly higher volume. Now remember what I say about the price and volume. The price is represented here in the pattern. The volume is increasing. Those combined trump the oscillators. So some of you might be saying, oh, look at the CCI, it's oversold, we're going to get a bounce. I'm not saying we can't get a bounce on Monday or Tuesday, but that's certainly not looking good for the bulls right now. And I think that next week we're going to move down towards that target that I mentioned and I've been holding for a while now. I think we're going to move down to that target to hit that at 187.62. So stay tuned next week. It could be another interesting week. Looking at the cues, here we go. We have the fan lines up. I drew these last week for you to show you how to draw fan lines. You can go back to that recording and get a refresher on that. But we have 6 fan lines in the sequence, with the most recent fan line going almost vertical. And as I zoom in here from the monthly to the weekly, you can see that again. The weekly has a bearish engulfing right at that fan line, going in, zooming a little bit further into the daily, there you go. You got a bearish engulfing right at that fan line. And my rule for fan lines are this. When the most extreme fan line in the sequence is broken, and this is fan line number 6, you have a 90% chance it's going to drop to the next fan line in the sequence. And so, well, that's not 100%. That is a very high percentage that we will drop to fan line number 5, which in turn would absolutely get me to hit that target right there. We're not that far away from that target right now. I mean, that target, again, I'll reiterate that. I think we'll hit that next week. That target is currently at 367.74 on the Qs. And the low from today was 371.53. Yesterday was almost that matched low, but we had 371.53. So we're getting closer and closer to hitting that target. Now, if we do hit that target, understand that that would force fan line number 6 to be breached here. And while that is something that I pay very close attention to, you have to understand the mechanics in the market is that the long or swing traders, they stack their stop loss orders below key support levels and trend lines and such. So if we start getting down there, you're going to have maybe some of the market makers pushing it down to trigger the stops and take a new short position in this area, which could push it lower. So we'll have to see. Next week, like I said, is going to be a very interesting week. So that downside target is still in place. Let's go to SPY. That's the S&P 500 ETF. What do we got there? Yep, another bearish engulfing candle. My target is still in place at 442.49. I think we'll hit that next week. Look at that increase in volume on that bearish engulfing candle, and look at that increase in volume on the close below the 20-period moving average. Another little concept that you want to pay attention to is that the moving average acts as support. So it acts as support here, here. For a brief time on Wednesday, it looked like it was going to hold this support. And then Thursday and Friday, we're now breached that. So what happens is that moving average, now that the price is below the moving average, will now act as resistance up here. It's called roll reversal. And I have some educational videos out there for our members that highlight that role reversal concept so you can learn how to use those lines, not just for picking entry points, but for also managing risk. So again, to reiterate, that downside target is 442.49. Now let's talk a little bit about the VIX, ticker symbol VIX. Last Wednesday on the midweek report, I said we would most likely come down and fill that gap. Said we would go higher. You need to go back and listen to that video because it's pretty amazing. I said I was going to do the forecast that no analyst would want to touch. And so I said there was a good possibility that we would go up and hit my target here at 1720. Well, what happened yesterday? The high was 1742. Then what happened? The VIX during the course of the day made a hard turn in the morning especially, and it looked like that gap was going to fill. That's still an open gap, by the way. That's still an open gap. But with all the bearish engulfing candles that we're seeing here, that gap may stay open for a while. I think eventually it will hit. And I said, all gaps fill on the VIX. I just don't know when. But that was a good attempt to fill that gap. And I think that could stay open just for a little while because the technical charts on the major markets are looking a lot more bearish, which again, for the VIX, that's bullish. All right, so let's get to some of the extra commentary that I have for you here. This is evidence of the manipulation that I talk so often about. And this is Avis now. Now, Avis came in showing earnings of $11 and a penny, which is $4.70 lower from the previous report. So that's not good. Anyone that can look at numbers can tell you that's not good. That's a big drop, $4.70 from the $15 here. But here is what I'm highlighting. The analyst came in and forecasted $9.66. Now we're seeing a lot of this being intentional. Why is that intentional? Because it helps the companies. And you might say, oh, there's some collusion going on here, manipulation. Yep, there is. No doubt that's happening. A lot of analysts that I'm seeing are lowballing the earnings, and the companies, even though they're showing lower earnings, the analyst lowball earnings estimate is allowing these companies to survive a bad earnings report. You see what I'm getting at? So they lowball the earnings at $9.66. And what happens? They come in at $11 and a penny, and the stock storms up. And what happened with Avis? Initially, in after hours, it was looking pretty bad. And then it closed that day with a bullish engulfing candle. Ultimately, the stock is starting to get hit because I think investors are starting to see this game that's being played. But it's just a big fat beware. It's a caution flag that I tell people about all the time. Don't get sucked in to be one of the sheep that get manipulated, especially on the opening of the markets the following day after earnings releases. This is Notes by Charles Hugh Smith. Thank you, Charles. We're borrowing this chart because this completely highlights what I've been talking about for many months. It's basically the mechanics of how a bubble works, how a bubble bursts, and why I still believe that the downside 2020 lows are still going to be hit. Those are my long-term, keep that in mind, those are my long-term goals that I think we're going to hit those 2020 lows. It's not going to be tomorrow, may not be next week, but you watch out below. I think it's going to be shocking for investors to see how dramatically lower we go after all this hype. Now, here's another chart that I found from Whale Wire that basically describes the psychology behind what's happening. I'm looking at the NASDAQ here in comparison. So what happens? Well, in 2021, I called the top right there. Everyone knows that. And then what happened is it continued to go down in 2021, and all the bears were looking like heroes. Then what happened? We have this bounce. As I magnify that, you could see that this chart is also identifying that as a bull trap. And then what happens is, like we saw last week, oh, everyone's turning back to normal. We're back into a normal bull market. Let's go. Let's buy. That's exactly where we are now in the NASDAQ. And I'm going to show you on the next slide how the NASDAQ is being manipulated through the Magnificent Seven, which are the AI stocks and the tech stocks that are driving the NASDAQ up. This is where we are. This is where we once were. Back in 2000, that's exactly what we saw. And I do believe that history is going to repeat itself. Here is a chart, and I took it upon myself to separate the Magnificent Seven. This is Apple, Microsoft, Amazon, Nvidia, Tesla, Broadcom, Google, and you can see that this candle chart here is an aggregate of those Magnificent Seven stocks that I just mentioned. And I took them apart and overlaid that on top of the QQQ line chart. Look at the difference between just the seven in the aggregate as compared to the NASDAQ. Now, some people say, oh, we're going through a rebalancing. Well, here's where, again, the manipulation takes place. If they're rebalancing let's say the Apple position that they hold in this index, what are they doing? They're selling Apple and buying more of the lesser stocks in the allocation. The rebalancing is nothing more than a profit-taking move here in the big cap or the mega cap stocks. So they sell out of that concentrated position and they start buying lesser held positions or smaller positions. And people just overlook this, oh, it's just another rebalancing. No, it's manipulation at its finest. And so these are lessons, and I know people get frustrated when I talk like this, but see, these are not illegal activities by any stretch. Nothing is happening here that's illegal. Manipulation is manipulation. You just have to know how they are manipulating the market. And so if you know how the actions are taking place and how the charts are giving us that signal that tells us things are overbought or oversold, then you could use the charts to manage risk and also pick your best stocks in your positions. Now remember, I cater to the swing traders out there, not investors. I'm more of an option trader who's in a swing trading mode with regard to time frame, which is 3 weeks to 3 months. And so those who follow me are considered to be swing traders in my book. Now, remember what I said at the very end. I'd like you to please like and subscribe and comment and share. Please do all those things because we are on a roll. And when you see what we have lined up for you next, you're going to be wowed. I promise you, you will. Just stay tuned to stickytrades.com and I'll talk to you on the next report. So long.